Hooty hoo, all my stock market gamblers. Welcome today. It's Friday. We made it to the end of the week. We got June 11th. Once again, the markets aren't really doing much. Dow's kind of flat. Nasdaq's kind of flat. They're flatlining, right? Well, the fireworks is going to start next week. Now, what happens next week? Well, we got a meeting of the Fed. The Fed meeting on Wednesday. Now, why do I think this one is going to be so important? Well, because it's going to be a change in policy. A change in policy. They're going to talk about tapering. Taper is the word. Now, what does taper mean? It means to pull back on the money printing. Okay, so we get the Philadelphia Fed president coming out and saying it's time to start thinking about raising interest rates. Now, you might remember that the Fed, their comment was they're not even thinking about raising interest rates. Well, not so fast. Philadelphia Fed president says it's time to start thinking about raising interest rates. Now, the Dallas Fed president, he says that he thinks it should be sooner rather than later that we raise interest rates. And our treasurer, Janet Yellen, comes out and says higher rates would be a plus for society. Now, I'm not exactly sure if I agree with that or not, but that's Janet Yellen. So the verbiage is starting to change. They did not want to ever raise interest rates ever again. They wanted to keep them at zero. But here, the language is starting to change. Now we get the Fed coming out on Wednesday with they're not going to move the interest rate, but they're going to talk. They're going to talk, and the language is going to start to change. Now, where do most market corrections happen? They happen on the policy change, the change in policy from the Fed. Now, when this market changes, it's going to really explode. When the Fed goes from printing $6 trillion a year to not printing money at all, the stock market's you're going to see a big change in the stock market. But it's not going to happen that way. But next week, I do believe, is the week where the fireworks are going to start. Okay, they're going to start with talking. They're going to start with saying, hey, maybe we have to look at raising interest rates sooner rather than later because of the inflation. Now, the Fed, they're admitting by their own measurement of inflation that we're running about 6% a year. That's their own numbers. And those are numbers when they take out, oil, gas, food, and housing. They take those numbers out to keep interest rates low. Really, inflation low. Really, inflation's running about 15%. I think me and you know that. But they're saying 6%. 6% inflation. Okay, so if they're saying 6%, we look at the 10-year bond, paying about 1.5%. We look at the 30-year bond, paying about, 2.2%? But they're admitting by their own numbers that we're running at 6% inflation. Now, anyone with half a brain could tell you this is not going to end well. As a matter of fact, Deutsche Bank came out and they're warning of a global time bomb, a global economic time bomb. What are they basing that on? They're basing that on inflation caused by debt. We have too much debt in the marketplace, and this is creating a time bomb. It is a ticking time bomb. When this goes off, oh my goodness, it's pretty much over. All these bubbles will be popping. You'll see the real estate bubble pop. You'll see the stock market bubble pop. You'll see the bond bubble pop. All the bubbles will start to pop. They'll be pop, 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 pop. You'll hear it around the world. Deutsche Bank is not wrong, but, like I say, if you got half a brain, you know that this is not going to end well. So now why do I say that the market is going to melt down next week? Well, let's think about this. Okay, so a bear market happens about every 5 years. Okay, have we had a bear market in the last 12 years? No, we have not. We've only gone straight up. We've had some corrections. That's true. We've had corrections. But corrections happen about every year. You get one correction a year. That's just on average. Now, a bear market, if we go into a bear market lasts between a year to a year and a half is how long a bear market lasts. And in a bear market, this market's going to come down about 50%. Do I think we'll go into a bear market? No telling. Do I think we'll get a correction? Yes, I do think we'll get a correction. Do I think the correction's going to start next week? I do. Maybe at the end of next week. When the Fed first comes out with their announcement, it takes traders a little bit of time to digest the information that the Fed says, because they study every word. Every word. If the Fed puts in the word taper, look for the market to drop. The market doesn't want to hear about tapering. They need more money, more stimulus going into the stock market. But I'm telling you, the Fed is going to talk about tapering, which is going to send the market down. But here's the funny part. They cannot taper. They cannot. They know they can't. They know they can't raise interest rates. There is no way the Fed can raise interest rates. They will not do it. They cannot do it. Oh, they're going to talk about doing it. And that talk is going to get the correction going. The talk is what's going to get that correction started, not the actual lowering of interest rates, raising of interest rates. They're not going to raise them. They can't raise them. They cannot raise interest rates. Will not happen. Will not happen. They're going to talk about it, and that's going to get a correction. Now, if that correction's too big, what are they going to come in with? They're going to come in with the tsunami of more printing of money. Now, they're talking about tapering. They're talking about taking some of the printing away, taking the punch bowl away from the stock market. It's just talk. It's just talk, but talk can cause a correction. That talk will not cause the bear market yet. I don't think so. The reason being that so this correction probably should be bought, but it's going to start to happen next week, the correction, in my opinion. This is just my opinion. I'm just a guy with a microphone and a computer. You do your own research. But I think we're going to get words coming out of the Fed's mouth on Wednesday. They're going to say taper. That's what they're going to say. And the stock market, not going to like that. It's going to come in. But here's the funny part again. I'm telling you, they cannot taper. They cannot stop this printing of money. Once they stop, the ball game's over. They know that. They cannot raise interest rates. Once they raise interest rates, the whole ball game's over. The bubbles pop. But my call is for the market to have a correction starting next week when the Fed opens their mouth. When Jerome Powell goes in front of Congress and opens his mouth and says, well, we're going to start thinking about tapering. Oh, inflation is in check. It's transitory. Well, what it's transitioning into is hyperinflation. And you can't have hyperinflation. Fed's in big trouble here. I would not want to be in the Fed right now. They don't have a choice. They can't stop printing money. They can't raise interest rates. But they're getting this transitory inflation is starting to become hyperinflation. It's not going away. It's becoming more and more. Look at oil, over $70. $70 a barrel, probably going to $100. Not too distant future because of inflation. Look at postage stamps. I think they just announced they're going to raise them up. If there's no inflation, why are we raising the postage stamp up? I think it's going 55 cents to 58 cents. I'm an old guy. I remember when they were 2 cents, and now we're going to 58 cents. But there's no inflation. None. Well, they call it 2%. No, we got 15% inflation, maybe 20%. And it is transitory. I think they have that part right. It is transitory. It's going from inflation to hyperinflation. Now, no country survives hyperinflation. It just destroys the currency, destroys the money, destroys the country. But that's the direction we're headed in because the Fed has made so many mistakes. So many mistakes up till now. There is no way we should print $6 trillion a year. We just should not do it. But we can't stop because as soon as we stop, ball game's over. Well, we got a weekend ahead to think about all this. Like I say, this probably is not going, fireworks probably not going to start yet. Probably next week. My guess is around Wednesday when the Fed talks. Maybe not till Thursday, till the traders get time to kind of digest this. But what I've done is I've taken a lot of my positions off right now. I'm pretty flatlined myself with this market. I think I'm waiting for a better chance to get in, a better chance to buy. Right now, no, I don't want to be in that. I think the risk reward is too little right here. I think there's a lot of downside risk and not a lot of upside reward. So just be cautious. Be cautious. I think there's going to be a meltdown of, I'll call it, let's call it 20%. Okay, 10 to 20%. But we're going to get a correction here, and that's a time to start putting money to work. I don't have my money working right now. I'm in cash. I like cash. Now, cash is an actual position, and we know that. We know that cash is the position. You can have cash, and cash is good, dry powder, ready to start picking up the bargains when they come in. And I think they're going to start to come in next week. Get out there. Have a great weekend. If you like this stuff, give me a thumbs up, and we'll talk more next week. Bye-bye now.